Everybody, welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is October the 6th. We're going to talk about the 50 housing markets that are turning ugly right now. This is a report that's produced periodically from gobanking.com. If you go to their website, you can pull this report up. I'll have a link to it in the information section of the video. However, they talk about investing, credit cards, mortgage rates, a whole bit, kind of a financial site, but every so often they produce this information, which I like to take a good look at and see what they're talking about. Again, it's always good to be informed, see where other people's perspectives and opinions are. By the way, I'm Randy Patrick, your host here, putting the realism back in real estate. If you're not already a subscriber, please smash the subscriber button. I'd really appreciate that. We talk all things real estate here and debunk the housing narrative that's going on at the moment. So the whole point here is that I'm going to be talking quick, and we're going through 50 of these markets pretty as fast as possible. So if you're looking for time, you might want to put my speed up to 1.25 or 1.5 as far as the playback is concerned. So housing markets are turning ugly. This is based on information that GoBankingRates.com has put together. They put together a list of 50 housing markets where residents might have to worry the most about. How they came up with this information? Well, they took the foreclosure rates that were in a certain marketplace and the growth or lack thereof, as what they say, in home values over the last 1 year and 2 year periods. And the study identifies those areas where local real estate is seriously suffering. So what they're basically suggesting is the fact that, hey, these are some markets that are out there that may, not, we'll say, appreciate or, keep doing what they're doing, that they're maybe up for a downturn, they're going to turn ugly. Now, turning ugly, I think, is somewhat of an open-ended statement. I mean, it's all your perspective. Like, what do you consider, what do you consider a market that turns ugly? Like, what's the decrease? What's the foreclosure rate? Whatever. So it's very subjective here. But the point is, it's just someone else's thoughts, and I like to talk about that. And let's see what's going on here. So let's start off. Of course, it's a countdown from the lowest to highest. So Rockford, Illinois, first place you're looking at. What they do is they give you home values, price changes, and foreclosures. And what they're saying here is you might think a median home price under six figures, residents would have an easier time covering their mortgage, but the foreclosure rate is well over triple the national average. So there you go, which is kind of interesting. So they look at, even though it's got some good price change. So this is where you have those two market segments, the K-shaped market, dichotomy in the market, foreclosure rates increasing, maybe values aren't there, but we still see some value increases going on, which is weird. All right, Charleston, South Carolina, we can see that the return is getting less and less. Home values seem to be grinding to a halt, but you know what? Their foreclosure rates getting up there as well too. Next is we got to get going here. Next is Fairfield, California. Obviously, the California, they're looking at not much increase in home values. And typically home added value of $10,000 over the year, so it's not a huge dollar value. And again, it's how they factor in the foreclosure rates. Next is Amarillo, Texas. So clearly, when you think of a housing market where no one's getting rich, but people appear to still be paying their bills at the same rate as most places that isn't ugly per se. Amarillo's inclusion might not sit right with you. The low growth rate home value is clearly not what residents would prefer, but it also has the third lowest foreclosure rate in the study, coming slightly ahead of the U.S. average. So there you go. All right, College Station, Texas, home to Texas A&M University. Serious trouble holding on to their homes. Their foreclosure rates are roughly triple the national average. So that's what they're looking at here. Joliet, Illinois. Basically, Illinois has problems with foreclosure all the time. So, they're looking at, hey, we've got home values around 150. The city does offer some relief from high home prices, but we still don't have this huge growth, and we have foreclosures that are still not too bad. San Angelo, Texas, another Texas city, and the typical home comes under 150. However, the lower value of mortgages there hasn't translated to more affordability for many. Foreclosure rates run well over the double the national average. All right, we got next one here. I'm going to move through these as fast as I can. Annapolis, Maryland, so clearly higher home values. Second lowest foreclosure rate in the study, but basically they're seeing their property values drop significantly as far as the percent increase in change has not done well the past 2 years. Cedar Rapids, Iowa, doesn't seem so troubled. Home value is affordable, struggling to pay the bills. locally with foreclosure rate more than triple the rest of the country. Round Rock, Texas, again, main reason Texas town lands on this list because the slight decrease in home values from last year. Market grew 6.5%. So knock on wood, the latter half of the 2018-19 would represent a hiccup and not a new trend. All right, Chicago. Well, obviously we know Chicago always has prices, home value issues, and foreclosure issues. So again, this is kind of a broad. I mean, Chicago's a big city, very populated. So the median didn't grow too much. It says the foreclosure rate well over the national level, but there's other things. There are taxes, state and local taxes, property taxes. Maybe Chicago itself doesn't have a big time foreclosure rate that's high, but Cook County has a huge volume of foreclosure. So again, I see that being, probably should have been higher in the list as far as I'm concerned. All right, here, Decatur, Illinois, another sign of trouble. Decatur offers a shot at homeownership well under $100,000. However, stagnant home values and low purchase price could reflect a low return on investment you can expect. All right, Plainfield, Illinois. Again, a bunch of stuff in Illinois here. Foreclosure rate looking a little higher and much higher than national average. We've got Conroe, Texas. While the 2-year growth rate in values isn't bad, it's still over half the national average. Foreclosure rate should really raise red flags. 1 in every 4,500 homes is foreclosed on there, which is higher than national average. Albany, New York. Again, 1-year price change, not much growth. Or 2-year price change, almost 5%. It's the capital, I believe, of New York. Foreclosure rate just double the national average. So there you go on that. Vallejo, California. Again, California is going to be a little different, higher price points here. We've got foreclosure rate triple the rate for the nation. And again, we're not seeing huge increases for California. We're seeing 2% and 3.4%. So the value is, not huge increasing, and foreclosures will start to bring it down. Wilmington, Delaware. While Wilmington's median home value is under the national average, the lower prices aren't necessarily translating to an easier time keeping up with payments for everyone. Just over 1 in 5,000 homeowners is facing foreclosure. So there you go. Shreveport, Louisiana. So we look at a lower home value, so over 100 grand. We've got there's even some good news over the last 12 months as home prices have risen almost on pace with the national average. However, the big story would be the high foreclosure rate, with 1 in every 5,637 homes being foreclosed on. Yes, Louisiana has a problem with that. Georgetown, Texas. Okay, another Texas city with relatively low foreclosures rate for this list. However, home values are stagnating, adding less than 1% over the past year. So we see certain markets or submarkets, basically when their values are slowing down, that typically shows that they've plateaued and could be going the other way. So the closer to zero, obviously the closer to the negative value, all right? Tracy, California, an expensive city with home values running over $500,000. It appears that home values are slowing down and foreclosures are 3 times the national rate. Picture Stockton, or whatever they're saying. Stockton, California is located roughly 30 minutes from Tracy, if you want to know where that is. I can tell that Stockton, California was one of the worst places in the country, let alone California, in the last housing crisis for foreclosures. Newark, Delaware. All right. Basically, lesser known in Newark, it's not New Jersey. See a lot of people seriously struggle with home ownership, while the median home value is right around the same level as the country as a whole. The foreclosure rate is more than quintuple the national rate. So that would be 5 times. So certainly certain pockets of the country have issues. Delray Beach, Florida, a tiny rate of growth for home value should be part of why so people are struggling to hold on to theirs. Foreclosure rate is well over 4 times the national average. All right, Williamsburg, Virginia. Okay, again, more expensive than the rest of the country in terms of buying a house, but basically they're just looking at twice as likely to go through, as far as foreclosures, residents are twice as likely to go through one than the American average. Sugarland, Texas. From whenever I think of Sugarland, I think of football. Has the characteristics of other Texas towns that are in foreclosure rates much lower than the norm, but growth is really slowing down for the past couple of years. So that's, again, plateauing there. Lakewood Township, New Jersey. Foreclosure rate is much higher than the national average. However, the burg has seen home values creep up by a mere 0.4 0.43% over the past couple of years. So really, if they're not getting hit with foreclosures, they're just not having any appreciation, which is kind of counter to the national trend. That's maybe concerning. 25 Plano, Texas. Again, we're hitting a lot of Texas things here. Again, looking at national home price, or the averaging of the past 2 years is quite low, and we're looking still reasonable foreclosure rate, but we just see these lower year over year, 1 year, 2 year values. Lafayette, Louisiana. Interesting because, okay, they see the you see that the home values haven't gone up, but the foreclosures haven't gone up either in Lafayette. They're only slightly higher than the national average. And Louisiana is getting pummeled, or has been pummeled, with a lot of storms the past month or so. And again, when they took this information, this was an early September study that came out. So when they actually looked at this information, there's changes over probably 1 or 2 or 3 months when it's published, from when they figure it out, publish it, etc., gather the data. So things could have changed. Louisiana right now, if you look at the news today, being the 6th of October, it's another storm coming through the Caribbean. It's going to hit the Yucatan Peninsula in Mexico. It's tracking to hit, guess where? Louisiana, Mississippi again. So there's only so much that these locations can take with repeated storms, storm surge, wind damage, etc. Bryan, Texas, home values rising 0.49% from last year to this year. Foreclosure rates are churning at better than 3 times the national average. So it's interesting that Texas I look at as a growth state, and see, this is where we don't really talk about this, or mainstream media doesn't pick up on this, etc. Because all these submarkets, like maybe I don't know where Bryan, Texas is off the top of my head, but it's probably a suburb of a larger, whether it's Fort Worth, Dallas, Houston, San Antonio, whatever. But the point is, you can be seeing small changes in locations that they're having problems, but they're not making national headlines, not on the national radar, so to speak. So, but it's interesting to see that certain markets here, like, well, why would Bryan, Texas be 3 times the national average for foreclosure? So something is going on there with respect to the economy. Job opportunities are there, or other things that we're not aware of that's causing some problems. All right, Aurora, Illinois, Aurora. So for the last 12 months, produced just 1% growth for the value of their homes. But again, they still have a better than average, worse than average foreclosure rate as well too. So Illinois is just not a state really to see much growth these days. Elgin, Illinois, another one. Foreclosure rate in Elgin is roughly triple the rate of the country as a whole. Last year, price increased less than %. San Francisco. So here's a really big city. We had Chicago, now San Fran. So 1 year price change, 0.48%. 2 year price change, actually negative. Foreclosure, 1 in 10,000 plus homes. This has been obviously running, the market's been running too hot for a while. Median home values of almost 1.5 million could mean negative growth rate over the past 12 months. And foreclosure rate higher than national average. This is what happens when you can see a market like this. So the greater they are, the harder they fall. The bigger the bubble, the greater the loss of the bubble, or the burst of the bubble. So we're going to start seeing some of these larger markets. I know San Fran now has a lot of rental accommodation available. So a lot of things going on in these mega cities. Richmond, California. All right, again, very few, see a lot of its residents struggling with foreclosure rates, running 3 times the national average. Add to that a mere 0.21% growth rate, and things are starting to feel ominous. There you go. All right, Monroe, Louisiana. Well, Monroe residents are glad that they're at least not losing ground on their home values. It hasn't gained. You can see that, less than 1% in growth. The last 24 months have produced 1.28% increase, translating to just $1,500 more for the average home. Foreclosure rates still aren't that good there as well too. Baton Rouge, Red Stick, Louisiana. Same thing. We got a 2 year negative price increase. We also have, so home values are down, and we're not seeing, they're below, they're on the other side, the worst part of the national average on foreclosure filings. All right, Champaign, Illinois. It seems to be a theme going on here. Texas, Illinois, Louisiana, a little bit of California. This Illinois town has the dubious honor of being the highest foreclosure rate to appear in this study. 1 in almost every 2,100 homes. Though one doubts anyone there is popping the bubble to celebrate, at a rate of roughly 1 every 2,100 homes. That's better than 7 times the national average. All right, that's not good. 7 times the national average. And take a look at the home values, 150,000. So Champaign, I'm not too sure whether that's a suburb of Chicago or a suburb of another larger city, but not looking good there with respect to being, you know, one of the number one highest foreclosure rate in the state. All right, Irvine, California, another California city providing proving very expensive home markets, can also go very toxic. So obviously, 1-year price growth not good, 2-year price growth negative. When you're at $1 million, it's pretty tough to get going on the higher right side. Homes have plateaued. Foreclosure rate twice that of the national average as a whole is troubling. So this is where we start to see some cracks in the marketplace. You know, you kind of, this is like the double whammy. So you're not seeing the increase in values, and now we're seeing the foreclosure rates, you know, increase. Now, granted, we're not seeing those foreclosures really hit the market or impact the market as of yet, but that will come the next little while. All right, Baltimore. Yes, Baltimore, a large city on the eastern seaboard. We know that Baltimore has had a lot of problems. They're not having very good returns or good price changes. Baltimore features the 3rd highest foreclosure rate in the study, and but the prices are low, so produce a precious little growth in home value. So again, another one of these double whammy locations where they're not getting good growth. They've got what I would call affordable pricing, but you know, they're plagued with a lot of foreclosures. So I know that's a transition market, and that's a tough market to be in. So again, there's some problems brewing in Baltimore. New Orleans, so one of America's oldest and most historic cities. New Orleans residents appear to be struggling in recent times. Foreclosure rates are high, and home values have dipped slightly over the past couple of years. So yeah, just over under 1.5% for the 1 year, negative for the 2-year change, and we're up there with the foreclosure rates. Now, once and again, that's where when they did the study. So since they probably compiled the data, we've seen a couple of storms hit that area, with one tracking on the way here. That's not good. Peoria, Illinois, birthplace of Richard Pryor. All right, you can get a home at a cheap rate. You are a price point under $100,000. The 1 year price change under 1%. The 2 years a negative growth. Foreclosures are up there as far as how can I put it? As far as national average, they're on the wrong side of the national average. So there you go. Next we have up here Edison, New Jersey. Seen home values decline over the past 12 and 24 months, but foreclosure rates are relatively low. But they're still almost double the rate for the nation as a whole. So again, home values are a little higher in Edison, 400 grand, but you can see that they've plateaued with their values. So Albany, Georgia, the lesser known of the 2 Albanys in the list, yes, but it's one with a significantly more troubling housing market. Prices dropped over the last 2-year period, and foreclosures are coming in better than triple the national average. So again, when you see these negatives hitting, more foreclosures, plateauing or negative property value growth, they got some problems. So we're to the top 10 now. That was number 10. Here we go, Stamford, Connecticut. Obviously, Stamford is more expensive on the average, we can see, but we also see that it's a costly housing market, but it's not really increasing in value. And, excuse me. So and around probably the national average in foreclosures. So there you go. So Stamford plateauing or losing value. All right, that was number 9. What do we got? Going 8, Lake Charles, Louisiana. Yes, we can see that. This is the 6th and final Louisiana city in the study, making it the 4th most common state in the list. Home values dipped by 1.74% over the past 2 years, and they're higher than average on the foreclosure side here. Home values are only 180 grand. So not bad price-wise, but they're getting beat up. Again, I know this area is going to get, is being hurt as well too with the storms. Santa Rosa, California. All right, so home values are pretty high. We actually see negative growth there with homes being foreclosed on a rate of better than 1 in 4,000. Santa Rosa experiencing unusually large issues with foreclosures right now. As such, the home values are down nearly 5% in the past 2 years, which shouldn't be so surprising. And again, with respect to when you see stuff like this and then you have fires and other disasters going on, doesn't help anyone's market. All right, number 6, Laredo, Texas. Laredo's getting Texas border town, offers distinctly affordable homes. The average home price under 160K has been dropping over 1 year and 2 years pretty significantly, about average on the foreclosure filings. Fremont, California. All right, Definitely among the high-end housing markets turning ugly with a median home value over $1 million. And when paying those prices, might want to seriously reconsider. Appears to be a depreciating asset if you look at the past couple of years. So yeah, they're better than average with the foreclosures, but they're dropping price points the past couple of years. San Mateo, California. Even San Francisco can't match the median home price of San Mateo, which is north of 1.5 million. But again, the market appears to have a reverse direction with home values losing over 6% in the past 24 months. Again, this is Northern California area, and there's only so much, so high, so far it's going to go when it becomes unattainable for many people. And when it's unattainable, you have less buyers, and sellers are going to have to reduce prices to cater to the market that is available to them. Number 3, Redwood City, California. This is the 10th and final California city listed here, and also the priciest, clocking a median home value of 1.6 mil. Like the other high-priced California entries, it's hard to make the argument that you're treating this is investment on the price that's dropping and reversing after years of growth. So again, 1 year price change negative, 2 year price change negative 5%. Number 2, we're looking at Longview, Texas. All right, Longview represents the 11th and final Texas city, the state that placed the most cities in this study. The 2-year decline in home prices of 2.91% belies the extremely troubling 9.9% drop that has come in the last 12 months. Also, it says it's located 40 minutes from Longview, which is also, Tyler, Texas was also, I guess, on the list as well too. So it seems that we're having some concentration in some of these areas that have problems. But 1 year price change of negative 10%, almost 10%, would be troubling. Look at the home value, only 155. So this is not an overinflated market. This is an average price affordable home market that's actually hurting from perspective. So I don't know what's going on there. I don't know exactly where Longview is, but obviously worth a look if you're thinking what's going on in that marketplace. Okay, guys, number 1 on the list, the top 50 markets, or the 50 markets that are going to turn ugly, is Jackson, Mississippi. So collectively, all but 14 of the cities listed here are from 4 states: Louisiana, Illinois, California, Texas. But it's all the more notable. The number 1 spot is also the lone Mississippi city in the study. Home prices are down almost 10% over the past 2 years, and foreclosure rates are more than triple the national average. So yes, when you look at this, this is a recipe for disaster, having negative home price growth the past couple of years, and double or sort of triple the national average in foreclosure filings. It's probably a more depressed economy there, and I know that being that part of Mississippi, it probably has got some residual storm issues over the past little while, so that actually could get worse. So there you go. So when we took a look at this again, this is bank rates. We didn't see things like Newark, New Jersey, or like any Florida locations. There's no Florida locations on this one. So I guess it's whatever information they were using to calculate or value, whatever the emphasis or weighting they're going to put on their calculations. So again, they looked at price growth or lack thereof, or price declines, and foreclosure rates compared to the national average. So for example, I know in Florida, certain states like Florida, other locations, we have that FHA, guideline that I look at all the time, right? If you want to take a look at that, the most threatened metros based on the FHA delinquency. Well, Atlanta's the most threatened metro, didn't make the list there. I don't know if any of these Texas properties, Texas locations, are suburbs of Houston or Dallas. I don't know. Clearly, we know that there's stuff in Illinois, what was going on. Obviously, Baltimore was there. Nothing in Florida, and I don't know if anything was around the Riverside, San Bernardino area. So, I don't know, whether this is still too early information that's not really hitting yet. We see the delinquencies and stuff, but the delinquencies aren't foreclosure rates because they're not there yet. All right, they're pre-foreclosure, and in this case, delinquencies are pre-filing of foreclosure of notice of default. So it's not really hitting a pay count that can be calculated, etc. So it's just interesting to see what this group, this is gobanking.com. You can check out their website. They have all sorts of other financial information, from buying houses, credits, investing, credit cards, investing, the whole bit. So they're kind of a blanket, in there, it's where you go look for rates or whatever. So, but the point is, they put this out periodically. I think it's interesting to see what's happening and people's perspective about the economy and the housing market across the U.S. The interesting thing about it is we didn't see the typical, top 15 or 20 on lists like I have in front of me right now. We saw more suburbs, more smaller locations that are indicative of maybe some more localized problems with respect to what's going on in the marketplace, job issues, income and economy issues, etc. So something maybe if you're in those areas or you're around those areas, you might want to investigate, see if there's any opportunities to move there or work from the investment perspective. So having said that, here's a scoop on that. So I'm starting to talk about this a lot more now. So, so I guess the point is, well, what do you do with these 50 markets? Well, you look to see if, you watch them and you try to track them and you see, well, when should I be buying property? The number one question people ask me from the channel here in the comments and the emails is going, when's the prices going to drop and by how much? Well, that's two questions, right? But the point is usually it's all embedded in one communication to me. But the point is, we're tracking that. We're going to see some stuff happening. It's going to come in waves. Announcement regarding what I'm saying here is that we've got ways now that we're implementing that we're going to be picking up properties that are in distress, and the whole point though is I want to get ahead of the foreclosure sales auctions, and by doing so I'm getting ahead of the big institutional buyers who are waiting there with all this they call dry powder and all these funds waiting to buy, in this buying frenzy bonanza, and we got to beat them to that market. So it's a game changer I'm talking about. How do you find out more information? Drop me a line. You need to contact me for a consultation. I'm not going to talk about it on here. I've already found out over the past few weeks and months that my channel's getting beaten up from behind the scenes, so I'm not putting specific information out there with respect to what we're doing to sort of work against when I say work against the housing market, I'm actually working for homeowners and working for buyers who want to buy property, as opposed to the big corporations taking all the properties and converting us into a nation of renters. So that's where we're headed, guys. So if you're in the program that I'm talking about, I'm rolling this out to you. So I'm talking to people right now and updating them. This is the best and cost-effective way to stop a foreclosure sale. So more information, you just reach out to me, all right, or right here. Give me your contact information. Let's talk. All right. Thanks again for the views, likes, comments. Reach out if you want more information on buying, selling, foreclosures, training, advice, consultation, whatever. Look forward to speaking with you probably in a couple of days. Take care, guys.